So how many times have you been to Expo West? Did you come without it before you met us? I think you
Yeah.
came with us last year, right?
Oh yeah, I've probably been here easily 10 times
Oh, wow, okay.
over the years, but off and on, off and on. Nothing consistent up until the last couple of years.
I was thinking this is my 20th year. I started with a company called Icelandic Glacial in 2007, and this was the show in 2007.
I love that. You have a story, you've told me before, but that story of you guys coming with your, like, pretty
sneaking in
much
with
your dad's
badges?
suits and sneaking in.
Yeah. So before I start, maybe it'd be a sort of good idea to introduce you. So you and I have known each other, what, maybe 5 years?
Oh, longer than that.
When did you guys make your first investment in Oro?
I want to say 2017, 18.
It went that fast, 10 years already?
I mean, I may have it wrong, but it's definitely over 5. It's
Yeah.
pre-COVID, which
Yeah,
gets
yeah.
hard to remember for sure.
Yeah.
And I want to say a couple of years before pre-COVID.
So when we met you, you were working for another private equity shop.
Yeah.
And Danny and I have met a bunch of private equity guys. That's what you do in this business, is raise money. And then we had a dream of starting our own sort of venture
Yes.
capital shop. And it was almost like Providence. Like, I rarely believe in Providence, but it's like right when we were getting our thing off the ground, thinking about
Yeah.
who we want to partner with, you were looking for your
Yeah,
next
I
role.
left Virgo. Yeah.
Yeah, so it was like incredible the way the timing worked. And
Timing was great, and it was funny too because I was doing a little consulting at the time. You may remember this, but I was like, okay, what am I going to do next? And then you guys called, and I was definitely, just so I know I told you this, but I was like, I'm not taking calls from people I don't like. I'm not doing anything with anybody that I don't respect and already kind of know.
yeah.
And you know, you guys called. I'm like, oh, I love those guys. And
Well, it was kind of the same thing for us because, like, we didn't have the luxury of, like, we're not going to work with anybody we don't want because we wanted to find somebody incredible. And I'm like, if they're incredible, I'll figure
so you
out a way to
settled.
work
I
with
know
them.
that part.
No, but we were having a chat because, like, you know, Danny and I have literally met, 100 private equity guys, maybe 1,000, and so have you. And it's like, well, who do we like? And it was literally like a 10-second conversation because I go, we should call Scott Guthrie.
Yeah, that was.
And I didn't even
appreciate
know that you weren't at Virgo until I talked to you.
Yeah.
And I was like, oh, this might actually be an interesting conversation. Because my thought was, A, I probably can't convince him to leave what he's got going on. But B, maybe he knows somebody who would be great too.
You would literally call, this was good timing. You literally called me, I think about 3 weeks after all my non-compete stuff had gone away. Like I could do consulting, but I couldn't actually join a fund. And like the timing was
That's wild how it
impeccable.
worked out.
Yeah.
So it's been, what, almost a year?
I think we started raising capital last Christmas, so maybe a year and a month, maybe 2
Okay,
months.
so just over a year.
I think we got the first check, call it January, February, or first commitment.
Yeah, I don't think we started like cashing checks
No,
until
we didn't.
April,
No, it took
maybe?
us a bit because we didn't have our paperwork together. But we had commitments.
When you say that, what you mean is Danny and Dino didn't have his paperwork together.
No,
Because you came in and grabbed it. Like,
Yeah.
that was like, I talk to people all the time, and I'm like, Danny and I have a certain intuition. We think we understand, like, pattern recognition. We
Sure.
think we understand what has legs. But we weren't the guys that understood what was market in an LPA agreement.
Right.
We weren't guys that understood a lot of terms investors look for. Like, you and your team have taught me quite a bit about sort of measuring an internal rate of return. And
right.
are we going to make money on this? And if we do, is it going to be enough? And I'm so naive. I'm like, well, we're going to get at least our money back, probably double. Is that enough? And you're like, we're looking for 10x, Junior. We're looking for 10x, Junior.
1X is definitely not going to cut it. Well, and the honest answer on those LPA subscription documents were, I have never actually drafted from start like we did, but I knew enough of what they needed to look like, and I've done enough amendments actually in unfortunately in my time, so I knew enough to be dangerous around it, and then it's just having a good
Yeah.
lawyer after that. But
No, I talk to people all the time. So we had this vision of Taste Tomorrow Ventures. You came in and really like helped us make it real. Because I
Cool.
think Danny and I were sort of floundering. Like, we were good at getting meetings. We're good sales guys. We're good at chasing opportunities. But we were literally getting to the place where it's like the dog who chases the car and like, what do you do when you catch it? And we had this commitment from Ball Manufacturing. Shout
Right.
out Ball Manufacturing.
Yeah.
They were our first big commitment.
yeah.
And it was like, okay, now this is real. What are we going to do?
Also, I think, and this is a testimony to you guys, those first 2 or 3 commitments, they were okay letting us try to figure it out.
Yeah. No,
Very
they
patient. Like, it wasn't like, oh,
They understood we're still building the plane on our way down the runway.
yeah, absolutely. And I think that helps as well, because you got a lot of investors that smell when people don't necessarily know exactly how to get it from A to B or C to D?
Well, what I think makes sense, and I use this word in like the most generous way, I think that they were a little naive too.
Maybe,
Because
yeah.
they were frank. They're like, we've never done this.
Right.
We've never invested to get a return on our capital. Like, that's
Right.
not how our business operates.
Right.
We usually invest in other businesses with the thought of acquiring them or
Yeah.
tightening up a strategy.
Right.
We've never let anyone else invest our money for a return.
Right.
And that's what they were curious about.
Right.
And in a lot of respects, there's a handful of our LPs that are that way. And you've done a really great job kind of holding their hand and saying, no, this is how private equity works. This is how
Right.
venture capital
Right.
works.
Well, hopefully we're going to, I think we're building a really strong portfolio now so that we're going to miss on a couple and things don't, telling you, we all know things don't always work out the way you want. But I do believe we're going to hit more than we miss. And we're definitely, the founders that have been attracted to work with you and Danny have been amazing. And I think that sets the whole fund apart.
Yeah. Well, I think the other thing too is kind of a testament of the time. Like between Danny and I, we've got 60 years in this business. So when you can meet a founder who's like, I want you guys in,
Right.
I'm going to open a round just for you, or I'm going to give you my last round's price,
Yeah.
or here's something off market. Like
Right.
that's been really more powerful, I think, than walking around handing out
I
cards.
can tell you, I used to spend 2/3 of my time in my previous life as an investor trying to do pipeline, just talking, trying to gain credibility, maybe just trying to figure out if they were even worth, if we liked each other. It's like a marriage. And I don't do any of that now. I do a little bit of it. There's a few things that I see, but everything is coming through you and Danny, and it just takes that whole chunk of a lot of kissing frogs, right, off the table.
Yeah, for sure. And I think the other thing too is like one of the things I've learned is you don't really know until you talk to the team
Right.
and really kind of understand what do they have going on.
Right.
Because there's been a few ideas I've seen where it's like, well, that's not ready for us. And
Right.
then you talk to them, they're like, oh, this is further along than I thought.
Yeah.
Or, wow, they've got some IP or something that
Yeah.
I wasn't familiar with.
Well, you know what's good too, I think now, is we're now in a place where I think we do know what we want, or at least maybe it's just me, you guys always knew, but I feel like we've now really, even in a year, honed in, okay, that's exactly what we're looking for. And not, oh, we don't need that, maybe it's already in the portfolio, or it's not real, not
Well,
big
one of
enough
like
for
the
us.
really interesting things you taught me is I've spent 15, 16 years raising money. And when you raise money, you don't have an idea of it being a competitive process. Maybe I've never been involved with a good enough brand. But when you were like, no, we want to be competitive. Like we want to make sure that we're the first stop for deals. And I'm like,
Right.
what do you mean? We have money. Like, doesn't that make us interesting? And then the more you look at some of the deals that frankly were hard for us to get into, like, Honest Tea, they made room for us because of the relationship that Danny and I, more Danny than me, has with Seth. And
Right.
we got into Better Sour because, I'd known Bella,
Right.
almost 10 years.
Right.
Same thing with Junie,
Right.
Jeff Church I've known a really long time.
Yep.
Jay Shetty became a new friend.
Right.
So it really is that people business. And
Absolutely.
if you want to get good terms for your fund and get into the deals that no one else can get into,
And
it
just
is
work with great
competitive.
people, right?
Yeah.
I think we found great founders, and great founders bring and attract, better other great people around the space. I had a discussion with a brand today, and we talked about who's around the brand already, and that gives me comfort. Like people that we know, Michael's involved, and you're like, okay, like these are the kind of people I want to be involved with. They know what they're talking about. Did you see that article I reposted it on LinkedIn the other day? And it wasn't my quote, but I loved it. And it was somebody commenting going, experienced beverage guys don't invest for the vibes. They invest for the velocity. It's a great quote. I wish I'd written it.
Yeah.
But I took it.
Who said it?
I'll have to go find out.
Okay.
Not even anybody I know.
I'm shit on LinkedIn, so that's why I got to go look at your page.
No,
now.
but and he actually had a little video talking about, it was all around our announcement of our Series B round investment with Just Iced Tea. So he was talking about Seth, which he should, and how great Seth and that team is. And then he goes right into, and Taste Tomorrow's, it made it sound like we invested in the whole round, which we didn't. But
I'll take it.
we were with other great guys,
Yeah.
other great beverage guys. And he used it. Yeah, experienced beverage guys don't invest for the vibes.
No, man, and that's like.
And you know that, right? That's your whole life. It's like nobody's got time for vibes.
No, but what's crazy is when you talk about vibes a little bit, like some of these deals are so competitive. Like so many people want in them. Like I've looked at some deals recently that blow my mind.
Yeah.
And it's like, wait a minute, you're valuing your firm on a multiple of your 2026 forecast. Like
Right.
you're trying to get paid on growth you haven't achieved yet.
Right.
And then you look at who's standing in line to invest in that deal, and it's like, we need to look at this a little more closely because, it's more than just vibes, but there is no velocity yet.
Right. Also, this is what I try and coach these guys on. If they're like, you can get, especially first-time founders, not guys like Seth or Craig, but other guys are like, oh, let's just get the highest amount I can. I was like, you don't actually want that for a
No,
million
you don't want to have a
reasons.
down round down the road.
Or you just don't want to be trying to achieve something that's on the stretch end of your abilities, and rather keep those investors around the table, giving them really easy milestones that, not easy, nothing's easy, but quantifiable, achievable milestones, and investors, as you know, and your whole teams will keep coming back.
No, but to your point about setting that valuation too high, the hope is you're going to grow into it. But if you don't, then your next round is painful.
And you're trying to accomplish things that are just, and you're making the wrong decisions for the wrong reasons, and you're burning through capital maybe a little faster. Like all kinds of bad decisions happen. And the other thing is, it's never going to be their last round, as you and I both know, right?
Yeah.
You've got to keep pacing yourself, because there's going to be another round and another round and another round.
No, successful businesses that are acquired, it's not uncommon E round, F round, like, you go deep.
Right.
Because this business requires, $50, $100 million in capital to create a $300 million product.
Right. So coaching the guys on that, and it's not, hey, I'm just trying to get a great deal. I'm trying to help you not make some really rookie mistakes. And don't take my word for it. Go talk to a guy like Seth or even Seth's last round was he could have raised more if he wanted to, easily.
Yeah. Well, equity's so expensive. Like, he's also good at kind of leveraging some other stuff.
Right. Like, you don't want to be giving up your own equity either. And that's another, common mistake that some early founders make.
So we're talking about people a little bit. Like, one of the things that I think makes our fund so strategic is not the L.A. Libations of it all, but like the people that you and me and Danny have brought into the business. So Ball Corp was one of our first, real commitments. Yep. Altria was another one of the early commitments. Molson Coors was one of the early commitments. Advantage Sales and Marketing was one of the early commitments. In your experience, how complicated is it to run LP group that's loaded with publicly traded companies versus one that just has rich guys?
So the honest answer is, it's my first time with publicly traded companies.
It's rare, right? Especially that many, right?
I've high net worth guys, obviously fund to fund guys. I've worked and sovereign wealth, which is a whole other. That is another textbook of lessons, but and different again. But no, I think because they do come with a different set of sensibilities.
Yeah. No, for some of them, there's like a double and triple bottom line where it's like, we want this to be about our corporate messaging, about outreach to entrepreneurs.
Right.
Or we want this to be about deal flow and insights into how like the people that we sell cans to, how do we feel their pain? Is this a way to experience what it's like on the brand side?
Right. Well, even a brand that I talked today, and I said, and I'm looking at their can, great packaging. I said, who are you with? And, because I'm going to have to, I want to push Ball, obviously, if they work. Turns out they were, it all worked out. But but it also brings another sense of, yes, they come at it at a different sensibility, but they're coming at it with some real world kind of different point of view that I wouldn't have had. And
it's incredible. So like having 7-Eleven and Sprouts in that LP meeting is incredible, because we'll talk about ideas we've seen, and Kim Coffin and the team from Sprouts, they see that stuff too.
Right.
And she's got real world examples of like, we have that product or something very similar and it's behaving like this.
Right.
And Jason Strauss, founder of the Tao Group, his insights on what's happening in on-premise are phenomenal.
Unique and interesting.
Yeah. Moni's got a perspective on what's doing well at 7-Eleven. Like, it's great.
Right. No, I think we really do we cover the gambit of when we have conversations around a brand. It's phenomenal. I've never had that ever in my whole life talking to LPs. You can get different points of view around credit facilities and all this other stuff that's important. But
financial engineering.
Yeah, financial engineering, which is a whole other thing. But the actual product itself is, we have phenomenal insights.
Yeah. We're talking about financial engineering. I talked to a brand recently, and they had no sales, but they were like a penny stock, like a publicly traded company. And I go,
like a meme stock almost?
Well, it's like, but this isn't, you guys haven't built a beverage company. You've created a financial Frankenstein.
Right.
I'm like, as a beverage guy, you're talking about investing in velocity and not vibes. It's like, that's uninvestable to me. Like, I'm not interested in that.
No, I agree.
Like, the bankers made a ton of money, the lawyers made a ton of money, and at the end of the day, the company spent what they got, and now they're a penny stock again.
There's always some sort of trick going on with SPACs, or I mean, there's always meme stocks. There's always a flavor of the day going on with those guys.
Two Canadians, we can talk a little bit. My favorite is the Canadian reverse takeover. That's my favorite. When we were trying to raise money for Aloe Glow, I talked to these two Canadian bankers, and they were like, we've got a special vehicle that has $3 million on the balance sheet, and you'll just absorb that.
Yeah.
And now you can be publicly traded because you absorb that. And I'm like,
right.
But it's got $3 million.
Yeah, right. And they never last, and they're hot for a minute. I had a portfolio company in a previous life that went into a SPAC, and I was sort of dubious, and this was the early days of SPACs where, okay, maybe it could work out. Like, I get it, smart people are talking. That's the other thing, you always have smart people doing these engineering things, so you're like, oh, well, he's pretty smart, or she's pretty bright.
Yeah.
And then, you're right, there's nothing, the there is not there. And
well, I remember SPACs were like all the rage maybe in 2013, 2014.
Yeah.
And then Chamath tried to bring SPACs back. He made a lot of money and no one else did.
Right.
And now they're kind of out of favor again.
Because exactly that. One or two people make a lot of money, and they do it on the momentum, and then they're gone by the time anybody really realizes.
They take their tendies off the tape.
Yeah, so I guess it's meme coins now, and whatever. Whatever. But there's definitely always somebody doing that.
Yeah. Well, one thing, it would be a shame to put this out there without kind of talking about it. And I know what we're looking for, but what are like the sweet spots that we're looking for when we're looking at deals these days?
Well, if I'm putting it out there, I'd like to see more snack and food opportunities. I think we've over-rotated for early in our fund on beverage, which is fine.
We get so much deal flow.
Yeah, we have deal flow, and we know it, right? You guys know it in and out. I'd just like to, back to that portfolio discussion of balancing, what we're doing. I'd like to definitely lean a little bit more into snacks. But I mean, our deal flow is still incredible, and there's a lot of great products out there.
As far as fundamentals, like, we don't lead rounds. We're looking for fairly modest investment. 250 to $1 million is kind of the check size.
That's right.
As far as like the numbers, like I tell people, pre-revenue is not for us.
No.
Like, we understand that 5 million in sales washes out most of the infant mortality. We're looking for line of sight on growth, line of sight on profitability.
And yeah, line of sight on cash flow positive for sure. I like to use the metric of about 18 months of when they take that round of cash. That's being a little generous, but it's definitely, there's got to be a plan on how you're going to get to profitability. And if you're like, well, if we just keep growing this much, it's like, hold on here. Like, even if sales kind of just sit at 10 or 12%, what's the profit plan? Because if they can't get there, it's probably not anything we want to invest in. I will say this: I think snacks, we can come down to that $5 or $7 million revenue run rate. On beverage, I think we've been holding to 10 and 8 to 10, and I think that's important. That has more to do with the reverse engineering of when we would sell, and less around the brand itself and the market fit. But
well, what's interesting too is, like, 10 years ago, you were getting exits on just multiples of revenue.
Right.
And now I'm seeing a lot more strategics that are like, we want to know that this thing can make money for you, not for us. Like, if you got some EBITDA, we'll give you a much higher multiple on EBITDA. So I'm seeing deals now where they're structuring it as like 2 times revenue plus 3 times EBITDA is how you get a growing profitable business.
Right. And I think that strategy balances out a healthy growth with at least an eye on the bottom line. So if you're not fiscally trying to figure that one out and get your balance sheet in decent shape, then you're right. You're just upside down and chasing too many dollars.
It's so hard too, because like I talked to one of the GOATs, Lance Collins, and one time over dinner he was like, until 75 million in sales, none of these businesses really throw a lot of cash.
Right.
Like you need that much critical mass to support a team and support a marketing plan and have efficient manufacturing and then have something left over at the end of the day.
Right. Yeah. And it's also around the time that their equity pool starts to run out a little bit, starts to get a little tighter. So if you're not able to pay those new chunk of employees at close to market rates, you're not going to get good players and good resources. So.
Yeah. What maybe this is an unfair question, but what are you excited about now? What brands are you excited about? And if it's confidential, you don't have to tell me. You have to kill me.
I can't tell you with the camera on. There's I think there's still a lot to be done with protein and fiber. And I mean, we know, obviously I'm not saying anything that anybody doesn't know.
No,
but
you can't throw a dead cat in here without hitting a protein business.
Yeah, but there's white spaces, and I think taste still matters a lot, right? How many times have you tasted something that's whatever, in fiber,
Many.
whatever, and they're usually, or call it whatever it may be,
Yeah.
and they taste crappy. Because guess what? It's hard to turn those things into good tasting products.
Yeah.
But when you find them really good tasting products and great founders, then that's our recipe too, I think, for success.
I agree.
But I think there's still more to be done with protein and fiber.
Yeah. Well, you're the man, Scott. Thanks for
Thank
sitting
you.
down, dude. Appreciate it.
Thanks for giving me a seat.